What's up guys, today I decided to check out West Lake, which is one of the main attractions here in Hangzhou. I've been here a few times, so it's like the fourth time I think. But it's always beautiful, always kind of new, and there's always something to check out. So I'm here today, and I'll try to answer you guys a question about trading. Taking it very relaxed these past couple of days, and especially today with this view and all that stuff. But I did want to talk a little bit about trading, because I realized I didn't talk much about trading in the past days, except yesterday where I talked about losing trades and how, like, when you screw up. But there's so many things to talk about, and I don't know really what to dive into. One question I got recently that was about support and resistance. You guys know that it's a big part of my trading, right? But not as some people see it. Some people are gonna say you have to draw every single support and resistance on your chart. Every single like place where price bounce, you put a line there. And I don't really see it that way. This is like a way to identify it, but how do you know that price is gonna move at those zones? And the hard part is that if you identify all the lines, you're gonna have like a chart full of lines, right? It doesn't even make sense. What you want to do though is, the question was about support resistance. So the guy's gonna identify his zones, and he's gonna end up with a chart that's full of line. So what to do with that, right? And the answer here is that if you're gonna have a chart where you've identified lines, you want to, like, those are support resistance that are valid according to the way I talked about how to identify them. I'll put the article below for that. It's a simple way to know how to identify the zones and pick the right one. But once you have those zones, if you see there's too many zones, there's a problem here, and it's the fact that you're looking at a time frame too low. If you have many lines and many places where the price bounce and those support resistance levels, you won't be able to trade, right? Because it's like those bumps in the street, right? When you have one, cars are gonna bump there. It's gonna be like a small resistance. But if you have like many on the street, it's not the same thing, right? You cannot move your car. So that's a big problem. So the way you want to manage this is you want to look at your chart and pick a time frame where you're gonna have only one support, one resistance, like a sideways market. It's gonna be sideways. You have one lower level, one higher level, and that's what you trade. And those are the only two levels you should trade. And think about trading, because if you have too many, you're just wasting your time, and you're not gonna have a good reward to risk at any time. So that's really the key here. If you're on a forward chart and you have many lines, go on the daily chart. If you're on the daily chart and you have too many lines, go on the weekly chart. If you're on the weekly chart and it's messy, go on the... And the answer here, if you cannot find those zones, right? If you cannot find good, like, one support, one resistance, you do not have any reason to trade that pair. Like, just skip to something else. Skip to another pair. Because you want to have those that you have an edge, and those are going to be where it's clear, where you're able to identify everything clearly, right? So that's really important. The other thing I get pretty often, in email mostly, is people who say they trade price action and they fail at live trading. We'll just clarify one thing here. Everybody trades price action. Everybody trades action in the price. No one's going to be sitting at his desk at home waiting for price not to move to place a trade. Everybody wants price to move, and everybody looks at how price moves. The problem with price action of time is that trading only candlesticks or trading only what you see in price is very subjective, right? It's really hard. And most people who trade, they say price action, don't have enough rules to say what they trade, exactly what they want to take as setup. Right? So that's something you want to clarify as much as possible. Because you know that the way you're going to see the market or the chart when you're in the game, when you're trading live, is going to be different from the way you see the market when you're going to be trading demo. In demo, you're going to be much more calm. You're going to look at your plan. You're going to do everything perfect, almost, until taking your trade. In live trading, you might be caught up in emotion. You might want to take more trade because you didn't take enough trade in the past. And you want as much as possible to clarify everything from the start and have a methodology, a step-by-step process. What you look at first, second, third, fourth, to take your trade. The difference is not going to be whether you trade price action or not. It's going to be how you look at the chart, what you use to analyze the market. what to use to analyze how price move. Is it going to be an indicator, maybe a series of tools, a process, or candlesticks? That's going to be how you trade. Okay guys, so I just published a new podcast episode with Miguel Dexera. Check it out, it's really, really good. I got some really good lessons from this interview about how to trade and travel. Right? It's a big thing. And I've been doing it for 2 months. I can say it's really tough, more difficult than trading at home. But Miguel had really good advice on how you can do this and really what you need to put in place to start this right now.